Hey traders, this indicator behind me is the ADI. Let me write some words up here for you to keep in mind. It is a momentum tool and it is multi-time frame. So these are some acronyms to remember. MTF, multi-time frame. It is based on the McClellan. If you are not familiar with the McClellan, send me an email. I'll give you a little, maybe we'll talk about it. McClellan is one of the most important momentum tools that you can use for trading equities. Everyone uses it, so if you're not using it, you really should pick it up. You can usually get a McClellan indicator for free off your platform, so just take a look in your indicators and get familiar with the oscillator's relationship to the summation index. Okay, let's dig into the updates that got put out for this indicator. The first one was to protect your psychology. You see these pops in the data? This is normal for McClellan multi-time frame analysis, or any multi-time frame analysis. Each 30-minute bar closed, we got a new calculation, and it popped up, and it popped up. So we have a new feature called smoothing. And what smoothing does is it's not using averaging. It's trying to retain all this data in this line here. So we're getting a line that fits the data but doesn't destroy the data. And that's the goal in any smoothing model. Typically, the cost of smoothing equals your data destruction. So the more you destroy the data, the more smooth it is. And so the smoothing model here attempts to do that as little as possible. Now I know some traders are a little longer term. They're not as worried about data destruction because you're looking at maybe a 5 to 10 day strategy. There is a smoothing option. You can come in here and we can scroll down. Our primary is the raw one. Secondary, we're going to change from smoothing to average. And let's say you really want to smooth this out. We'll use Wilders and we'll do it at a 50. And I'll show you the averaging model that I built into this. And I think you really like the way it works. One of the things it does, you'll notice right here, you see that? It deals with gaps correctly. Instead of giving you the first 10 or 15 minutes having an averaging model that's trying to cope with a gap, this deals with the gaps in a way that makes your data set continuous and you immediately get a nice smooth number for your data set right off the open. That's useful for making better decisions more quickly. Instead of saying, well, the first few minutes of my data set are a little ski-wampus and you just ignore it. This is going to give you that great averaging type of model. And you can see how much it destroyed the data very far away from the points. But if you're looking for longer term strategies, that might be useful for you. So the option is there to smooth it out. One of probably the most popular charts to look at is to compare the summation to the oscillator. And let me show you my favorite way to put those two together. We're just going to smooth, no averaging, and this compares the summation index to the oscillator, the two most powerful tools out there for mid-term trading strategies. And you can see they look real nice and clean. I think that's important for trading, especially at a lower time frame. You need things to be nice and clean. You need a good clean signal to look at, to make choices from. Let me show you the chart setup that I actually use every single day. If you've ever traded with me, popped into the room and traded with me, you've seen this chart. I'm going to turn the points off. I'm going to turn this from smooth to raw. So we're just looking at the primary plot velocity and that's it. The other one's just the labels. So let's bring that up. This is the velocity of the oscillator. This is one of the most important charts that you could ever get comfortable with watching. This makes me, most of my money intraday comes from analysis right off of here. I have other tools that are very useful, but this is the heart and soul of most of the trading that I do. So this is what it looks like. This is the tool that I use. That's the setting. Now, there is one last feature that I'd like to show you just so everyone's aware. This indicator works 24 hours. So if you put it on an ES chart, it's not going to break. If you put it on a 24-hour chart, it's going to give you 24-hour numbers. It statistically calculates the overnight, so you're going to be able to put this onto all your charts that you love and watch it all the time. Now I have to say, 24-hour charts are hefty in processing. So if you want to turn off the overnight, you can put do not load. It can really eat up your processor. I have a very powerful machine to do all my calculations because I got to do a lot of stuff. So I can handle all this in intraday, but if your machine is, you're looking at an i5, an i7 with not a lot of RAM, you might want to put do not load on during the day so that it's not cramming up your processor and backing up your machine. This is a big calculation to calculate overnight numbers. So that's one of the features that's available to you on this indicator. It's not on the update, but I thought I would mention it so that everyone's aware that is one of the pieces of this tool. Now, if you're not a momentum trader, shoot me a message. We can get talking about momentum if you just want to, get an understanding of it. I'm always willing to talk about trading. Otherwise, I hope this was helpful, and good luck trading.